Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Gold touches a record high as traders bet on a Fed rate cut as early as this month. Chinese President Xi Jinping is hosting his Russian counterpart today ahead of a military parade tomorrow. And Donald Trump says India has offered to cut its tariff rates to nothing without elaborating further. Meanwhile, Brazil will host a virtual meeting of BRICS leaders to discuss U.S. trade policy. It's just gone 8 a.m. across the Emirates. I'm Shimona Versace in Dubai. What was a U.S. Labor Day yesterday, so U.S. markets were closed. We'll be back online later for trading, taking a look at how some of these key indicators are trading. We've got the U.S. futures leaning towards the green. They'll come up in just a moment. We'll bring up the futures monitor, keeping a close eye also on 10-year yields as well, which has started to move up a couple of basis points in trading this morning. We're beginning to see a re-steepening of the yield curve. So here you have it. The 10-year yields are about 1.5 basis points higher. At 2-year, maybe 1 basis point higher. So a bear steepening is the theme for today as we head into those key jobs figures coming through on Friday. The euro also slipping a little bit in trade this morning, down 14 basis points. We're at 117, but still about 1% higher throughout the course of the month as we continue to see downward pressure on the greenback. And then gold also. Take a look at gold, just shy of 3,500. At another, well, close to another all-time record high. Yesterday, we were speaking about silver breaking through $40 an ounce. Gold also now another record high in the intraday session, up 0.5%, and really just speaks to the fact that investors are positioning for a rate-cutting cycle out of the Fed and perhaps a lot more uncertainty as well about the path ahead with the unknown impact of tariffs and also the encroaching the Trump administration encroaching a little bit on the Fed independence. All of that is being factored into the price of gold. Okay, let's move on and check in on how markets in Asia are faring. Yvonne Man is in Hong Kong, and a bit of a mixed bag this morning. Yvonne.
Yeah, it's a bit quiet out there. Maybe that's why, with U.S. markets just coming back from that holiday a little bit later on. So certainly there wasn't that sort of pass-through. But then again, we are seeing a bit of a recovery in some of these equity markets like Korea, like Japan here this morning. China, though, is taking a bit of a step back ahead of that lunch break there. We were down about 0.9%. But we also just got that 10-year bond auction in Japan, and really was quite interesting, right? Because the 2-year was pretty disappointing in terms of demand. This actually drew the best demand that we've seen since 2023. So maybe there's still some appetite out there for long-end Japanese bonds, but certainly that is one thing to watch here. The 30-year bond auction is happening on Thursday as well. Some lines that just crossed in the last few minutes or so was regarding Suntory. Now, this is, of course, the beverage company. So they're set to be holding a surprise briefing a little bit later on here today with the president. And there are some local reports from Tokyo Shimbun that the Takeshi Ninami, the leader, is submitting his resignation letters. So the report also suggests maybe it's because of violations of drugs. So certainly that's one thing that we need to kind of see here. These cannabis laws, apparently that's what they are citing it right now. So that's the situation. We did see the stock erase some of the gains at the early onset of that news as well. We flip the boards, and of course, before we go, we're going to talk a little bit more about, yes, China's down today, but you take a look at some signs like margin trading, and this continues to be a liquidity-driven rally. But you take a look at the amount of margin trades, I should say, that has now surged to a record. So we're talking about 2.28 trillion renminbi in terms of margin trading there. So people actually borrowing money to buy up stocks. And that really has surpassed the record that was seen back in 2015. You may remember that was when that thing started to get a little bit more too heaty in that market and led to the collapse after all. But overall, people still say you got to look at it at different metrics as well. But this is certainly one sign that maybe things can continue for some time.
Yvonne, thank you so much. Yvonne Man in Hong Kong. Now, Chinese President Xi Jinping has met with his Russian counterpart Vladimir Putin after India hailed the special relationship between New Delhi and Moscow. Let's cross over to our China correspondent Min Min Lo in Beijing, who's been covering all of this for us. And Min Min, I've been reading some reports suggesting that Vladimir Putin has received almost a rock star reception at this summit over the last couple of days. And you have to think that a lot was discussed in the bilateral with President Xi, and perhaps Putin gave more details as to what discussions went down at the Alaska summit when he met with the U.S. president.
Yes, certainly one of the most iconic images that have come out of the SCO meeting in Tianjin so far has been that image of Xi, Putin and Modi laughing and chatting together. It's this symbolic representation of the energy triangle that has emerged after the Ukraine war. But yes, Putin and Xi are meeting today. It's ongoing right now. We don't have a lot of details about what is being discussed. I expect there would be some form of readout from both countries later on. But we are looking out for, as you said, this is the first trip that President Putin is making to China after the Alaska summit. So he might be briefing Xi on what happened during that meeting, what are his plans towards a ceasefire in Ukraine that could possibly appease Trump and ease off those pressure on China not to buy Russian oil. At the same time, we're looking out for specific deliverables, whether or not the two sides will sign any deals to deepen cooperation in certain sectors, whether there would be any energy, oil and gas deal as well, because Putin is accompanied by his energy minister, by some CEOs of state-led corporations in the oil and gas sector. And we know Russia has been wanting China to buy more gas and to invest in this Power of Siberia 2 pipeline that would divert a lot of the gas that used to be sold to Europe to China. But that's something that Beijing has pushed back on. It doesn't want to over-rely on a single country.
Yeah, and also just reading this morning that Kim Jong-un's train has crossed into China now. He's there to attend the military parade that's taking place tomorrow. So then you've got these three strongmen, so to speak. You've got Putin, Kim Jong-un, and President Xi. All will be standing side by side for this military parade. What is the significance of Kim Jong-un also being put in that category?
That's right. He is on a bulletproof train to China. He's crossed into Chinese territory, expected to arrive in Beijing later today. And again, another iconic photograph that you just know is probably going to live on the internet for some time, when the three of them stand together above that dais of the portrait of Mao Zedong on Tiananmen Square tomorrow. But yes, it's significant because it is the first trip for Kim Jong-un in since 2019 to China. And it is significant because just ahead of this, he was touring some of these new missile factories in Korea, a new chemical materials research institution under the country's missile program, unveiling new development program for its intercontinental ballistic missile, all in defiance of the pressure that we have gotten from the US and South Korea for North Korea to end its nuclear program. So it's in some ways a snub to President Trump after Trump indicated a willingness to meet with Kim as well. And the South Korean president offered to host the both of them, perhaps at the sidelines of the APEC summit in October this year. So Kim standing alongside the other big brothers is a symbolic show of this unity, right, in challenging this Western-led international order, and perhaps signaling maybe Kim is less willing to engage with Trump after the fallout of that denuclearization deal back in 2018, 2019, after the first Trump-Kim summit in Singapore as well.
Our China correspondent, Min Lo in Beijing, thank you so much for all the reporting the last couple of days. Now, President Trump says India is offering to lower its tariffs after the U.S. slapped a 50% levy on a wide range of imports, punishing India for its continued purchases of Russian oil. Bloomberg's news desk editor Balash Pence joins us for more. So Trump made this assertion on a post on Truth Social overnight, but have we heard anything from the Indian side to corroborate what he's asserting?
We have not, Jumana, and President Trump hasn't made it clear when the offer might have been made. We're not even sure if the two countries are engaged in any sort of serious trade negotiations right now. So it's hard to see this in any other context than in the light of the images coming out of China over the past couple of days of Prime Minister Modi being very friendly with the leaders of Russia and China, a warm handshake with President Xi, a hug of President Putin. And the latter is especially interesting in the context of the U.S. having been very, very critical of India for buying Russian oil, and that being the sticking point in the trade negotiations. So right now we will really need to wait for more details and some words out of Delhi before we can declare it the start of a re-engagement of trade talks between the U.S. and India.
Yeah. Okay, so let's watch that one. I quipped earlier this week, well, actually on Friday, I quipped that the summit was a BRICS without the B because it was Russia, India, China, the main leaders of those countries meeting together. But now we hear that President Lula from Brazil wants to have a virtual meeting for the BRICS countries next week, presumably to discuss again the fallout from Donald Trump's tariffs. So what do we know about that?
Well, President Lula has been very careful to signal that he does not intend this to be another anti-U.S. gathering. These countries have a lot of reason to talk about trade. They all have been hit by some of the highest tariff rates and have all been singled out by the U.S. in one way or another. But it is true that they are coming together in a very kind of precarious time for geopolitics. And the Brazilians do want to make multilateralism one of the themes of this virtual summit. Multilateralism is clearly something that's just juxtaposed with the idea of the U.S. unilaterally imposing its will on other nations when it comes to trade. So they do have a lot to discuss. They do have a lot of common interests, and it's hard to imagine that the U.S. won't come up in some way or another in these negotiations.
Balazs, thank you so much. Bloomberg's news desk editor Balazs Pence with the latest on tariffs and BRICS and all things that are going on in response to those tariffs. Still ahead, we'll get the market's outlook with BNP Paribas as traders price in a rate cut by the Fed as soon as this month. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Asian stocks have posted modest gains and gold has hit a record as traders position for a rate cut by the Fed as early as this month. Joining us is Parisha Saimbi, FXLM Strategist at BNP Paribas. So U.S. was out yesterday, quiet day yesterday, but things are going to gear up as we head into the next couple of weeks with the jobs report on Friday, Fed's coming up, inflation data. Before I ask you about all of that, I want to ask you about another story also that hit the wires yesterday morning, which was that the courts in the U.S. have deemed the tariffs applied by the Trump administration to be unlawful. Now, an appeals court has said that the tariffs can remain in place until mid-October. Let me just ask you, as someone who looks at markets, how big of a deal is this?
We don't think that it's too big of a deal. Ultimately, there is some delay now with the proceedings carrying on up towards the Supreme Court. And while questions remain whether they will rule in favor or against these tariffs, President Trump and the U.S. administration do have other tariff tools that they could employ in order to reinstate those tariffs, even if these ones are deemed illegal under IEEPA. So he could use things like the sectoral tariffs that he's already been putting in place, or there are other sections within the U.S. law that would allow him to kind of quite quickly reinstate some of those tariffs, even if they are somewhat time limited. So ultimately, we don't read too much into this, and we don't think that markets will significantly change their position, that tariffs are probably here to stay in some way, shape or form.
Okay, so tariffs are here to stay. Let's go to the here and now. Jobs report on Friday. The expectation is for a sub 100K number. So clearly, the softness in the labor market is beginning to show up. How influential do you think this print is going to be on what the Fed actually does in the coming months? Because they seem to be pretty intent on going for that September rate cut. Powell laid the groundwork for that at Jackson Hole. How much will this NFP actually move the needle?
So I think the question really for markets is if the data is substantially weak and if there are downward revisions even to the previous data, then I think markets could start to price in risks that we end up with 50 basis point increments of cuts. And so I think that's really what the market will jostle between. But I think 25 seems quite likely as at least the baseline scenario. That's our expectation for September, that they deliver a 25 basis point cut. The question is the data going to be so weak that actually 50 basis points will be in play?
Yeah, what if you get a slightly stronger print? Does that halt the most recent decline of the greenback? Because the theme for most of this year has been dollar on the decline.
I think the bar is quite high for markets to take a positive surprise and prompt that to see the dollar strengthening or to price out the rate cuts significantly. We would probably need to see a number in the magnitude of at least above 150, if not closer to 200K for payrolls and maybe some upward revisions to the previous data. I think ultimately Powell, as you say, laid out the framework quite clearly at Jackson Hole. He sounded quite dovish on those two key areas, inflation and the labour market. And so we think that 25 is likely, even if we end up with the 90K payrolls print that we are expecting, which is slightly higher, I think, than the market consensus. But even if we end up with that, we still think they'll proceed with a 25 basis point cut in September.
Yeah, last time we spoke, you mentioned that you were long or like being long euro versus the USD, target of 120. With everything that's happening in France now, the uncertain political backdrop there, do you maintain that position?
Yes, so certainly the news of the confidence vote being called was a surprise, and we did see, even in the DTCC data, there was a lot of downside buying of option structures in the euro, and that was something that did weigh on the currency last week alongside month-end flows. But we've already started to see some rebound this week, and ultimately we think there is already a lot of negativity in the price. Even if we look at OAT Bund spreads, OATs on asset swap, we think they're largely already pricing in risks of a downgrade and the risk of a slightly larger fiscal picture for France. So ultimately, we don't think that we're likely to see further weakness in the currency. If anything, if President Macron does decide to choose a new prime minister rather than carrying out snap elections, if the confidence vote sees the government collapse, we ultimately see that as a positive, because ultimately will bring more certainty to markets quickly and alleviate further uncertainty over the future, in which case the market can return back to fundamentals, which ultimately we view are quite positive for the euro.
And just picking up on your remit also of Asian currencies, we've had political turbulence in countries like Thailand and Indonesia over the past week. How is that expected to play out in some of the Asian currencies that you look at? And do you get a sense that investors would rather be positioned in EM currencies elsewhere around the globe?
So I think certainly the political turbulence is a negative for these currencies in the near term, because it raises the uncertainty. And I think in particular for Indonesia, we have seen portfolio inflows over the last few months as investors have been shifting into what we call these carry strategies and favouring these high yielders. And Indonesia has benefited from that. So we do see a risk that the recent protests could prompt some investors to reduce some of that. And that has ultimately prompted the currency to trade on the weaker side. But I think ultimately the authorities are in the market to smooth the price action and help to curtail some of that currency weakness. And so we don't expect a significant amount of further weakness going forward. That being said, this uncertainty could linger for a little while, and so it may take some time for investors to feel confident enough to consider reinvesting back into some of these markets. And I think more broadly, coming to your point of whether they prefer Asia or other markets, I do think that other markets would be broadly preferred. The Fed delivering these safeguarding or fine-tuning cuts should be positive for risk, and that includes then EM assets broadly, but it broadly means that carry strategy should remain favoured, and that means the higher yielders should outperform. And when we look at policy spreads between Indonesia in the US and India in the US, they're quite narrow at this point. So I think investors may favour the LATAM currencies when looking for that carry, and Asia will be used as those funding currencies instead.
Yeah. Thank you so much. Parisha Saimbi, FXLM Strategist at BNP Paribas. Thank you so much. Well, coming up, Botswana's diamond riches losing their shine. The nation now facing a slump that's cutting deep into its economy. Details next. This is Bloomberg. Botswana is losing its shine. The diamond-fueled boom that made it one of Africa's richest nations is faltering as lab-grown gems eat into the market for natural diamonds. For more, we're joined by Bloomberg's Matthew Hill. Matthew, well, up until recently, Botswana has always been held up as an African success story. What has gone wrong? Was the country simply too reliant on this single resource?
That's a really important point. People have always pointed to Botswana as being an African country that has used its natural resource wealth to develop the nation responsibly, to educate its people and provide better services. But suddenly in Botswana, things have drastically changed, as you say, because the diamond market has changed so drastically, with lab-grown gems coming onto the scene and having a really serious impact on prices. Now, Botswana depends on diamonds for about 80% of its exports, about 33% or a third of government revenues, and the sector makes up for about a quarter of the total economy. So when there's pain in that market, the country really feels it. Because of that, we've seen debt levels in Botswana as the country resorts to borrowing to balance its budget, to pay for its budget, nearly doubling just in the space of 3 years. So the impact has been really, really drastic.
Yeah, and is it specific to Botswana? Is it having an impact on other countries as well that rely on revenues from these natural stones?
Certainly, but you'll be hard-pressed to find an economy in the world that is as heavily reliant on diamonds as Botswana is. 80% of its exports, for example. So, there are a group of countries, including Botswana, Angola is another one, that have clubbed together to pool their resources, and they've pledged to spend 1% of their revenues on promoting natural diamonds that are produced in their countries to try win consumers back, try convince them that it's worthwhile paying a much higher premium for a natural diamond over one that is grown in a lab. But those efforts are probably more longer term and may take some time to pay off, if they do at all.
Yeah. Matthew, great to have you with us. And the full report is up on the terminal, today's big take. Bloomberg's Matthew Hill, thank you so much. Now for a look at some of the other stories we're following. Nestlé has dismissed the CEO Laurent Freixe after only a year on the job due to an undisclosed office affair. The Swiss food giant named Philippe Navratil, who heads the Nespresso coffee brand, as his replacement. The change extends a period of turbulence at Nestlé after the firm abruptly fired Freixe's predecessor last year due to poor performance. And coming up, Turkey's economic growth remains resilient in the second quarter. We speak to Selva Demiralp, economics professor at Koç University, on what's behind the acceleration next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Gold touches a record high as traders bet on a Fed rate cut as early as this month. Chinese President Xi Jinping is hosting his Russian counterpart today ahead of a military parade tomorrow. And Donald Trump says India has offered to cut its tariff rates to nothing without elaborating further. Meanwhile, Brazil will host a virtual meeting of BRICS leaders to discuss U.S. trade policy. It's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai. While U.S. markets coming back online, the picture is drifting lower, well, basically sideways for the S&P. As we head into some big data today, we have the ISM manufacturing numbers to watch out for, and then jobs data coming up on Friday. The expectation is that we will get a sub 100K print. But remember, the last one was a bit of a shocker for markets because of the downward revision. So let's see what happens there. 10-year yields not doing a whole lot today, but about 2 basis points higher in yield terms. So the curve is steepening up a little bit. The euro just shy of 117. Again, a bit of weakness coming through, but the theme over the last month has been one of strength for euro, this given some of the weakness in the dollar that has transpired throughout the month of August as well. And then gold, an all-time record high once again today, up 0.5%. So another record for the safe haven. Yesterday we spoke about silver also breaking through $40 an ounce for the first time since 2011. So another all-time high for gold. All right, let's check in on how markets in Asia are faring. Yvonne Mann is in Hong Kong. Yvonne.
Yeah, as those rate cut bets sort of build, I guess that's why we are seeing equity markets rebounding a little bit here. So certainly you're seeing Asia is flat, but you have markets like the Kospi, like Japan, that are actually coming back after that sell-off yesterday. So South Korea is up about 1% as well. We also just had that Japanese 10-year bond auction that actually had some pretty decent results in terms of demand. So the strongest demand we've seen since 2023. So you are seeing bond traders quite relieved by that. Yields are ticking lower at 161 this morning. And you take a look at the yen here, there's quite a bit of weakness going through. We're at 147, 148 levels here right now. The deputy governor of the BOJ did speak this morning and didn't really give that much details in terms of the rate hike or rate path. And certainly that led to some disappointment there. But certainly there is some talk that, the narrative around markets is leaning towards rate hikes. But the commentary that we're getting from the Bank of Japan is still not aligning. So maybe that's why a bit of weakness there on the currency this morning. And we're watching, of course, these big moves that we're seeing when it comes to Alibaba. So that's an 18% surge yesterday. We've come off that here a little bit in the Hong Kong session. So that seems to be petering out a little bit here as well. Maybe that's why we're seeing a drag in Hong Kong. CSI 300 is also seeing a bit of a pullback here this morning, despite margin trading hitting a record. But New World Development, that was an interesting scoop from Bloomberg yesterday, talking about this capital injection for the property developer. They've denied that. Stock coming down here as well. Debut in China with a appliance maker, Ox. That was pretty disappointing as well. And Suntory, we're waiting that press briefing from the company here. Local reports saying that the Suntory CEO, Takeshi Ninami, might be stepping down. We'll wait and hear more from the president coming up.
Okay, interesting. Yeah, a bit of a Alibaba hangover, I would say, in the markets after that 18% surge yesterday. Yvonne, thank you so much. Now, the start of Donald Trump's second presidency has matched his first term in proving a boon for emerging market stocks. But the rally risks running out of steam. The Trump bump hides the fact that should worry investors. Companies in developing nations are hurting. Joining us now is Srini Srivabala, Bloomberg Senior Markets Editor. Good to chat EM with you, Srini. Thanks for coming on the show. Maybe let's just start with the starting point, actually. And you write in your article that the MSCI Emerging Markets Index has posted an advance every single month from January all the way through to August this year. This has only ever happened twice in 37 years.
Yes, emerging markets started in 1988 as an asset class, as a formal asset class. And if you look at the history, there has never been an occasion when the stock index rose every month from January to August. Except on those three occasions, once under Bill Clinton's first term and twice under Donald Trump's. And that makes Trump the best U.S. president ever for emerging markets. I mean, that's a wonky way to look at it, but still.
You know what? If he's watching the show, he'll probably put a post up about that. I'm the best president ever for emerging market stocks. Okay, so that's the starting point, which also, I would say, is a bit surprising, given all of the uncertainties that we spoke about, the knock-on effects these tariffs would have. Many of those reciprocal tariffs were actually leveled at emerging market economies. Why have these markets been so resilient?
They have been resilient because Donald Trump's policies have spurred a weak dollar, which is the core case for emerging market investing anyway. And they have also sparked a desire among U.S. investors to diversify, to see global assets as a de-risking strategy. So there is a bad impact of Trump on the mindset of some investors, which is translating into flows for emerging markets, luckily, and that is driving the gains. So it is more of a sentiment-driven, more of a weak dollar-driven, tactical kind of a rally that is boosting emerging market stocks.
What about the micro, on the micro side of things? Because you flag in your piece that earnings have not managed to keep up with performance.
Absolutely. So this is optics. The rally is actually optics because it's a temporary bounce based on this sentiment and dollar flows. But underlying factors are negative. There is a good Trump effect and the bad Trump effect, if you will. The bad Trump effect is his policies are already reducing corporate profits in emerging markets. So much so that emerging market companies, by one measure, the blended forward 12-month estimates that we usually track, they are missing earnings estimates on average for the 13th consecutive quarter. right? That's like a long streak of bad earnings, below expectation earnings. And that is where emerging markets are. And increasingly, you see even big companies like Samsung Electronics and Petrobras and Indian Oil and Li Auto, all these are missing. So about half of emerging market companies are not meeting analyst estimates. And increasingly, you are seeing they are blaming Trump's policies, export controls or tariffs.
Yeah, it must be a tricky environment to be short, though, if you are concerned about the corporate profit story, because the markets keep going up.
Yes, the markets are up, but there are no legs, actually, if you look at it from the earnings viewpoint.
Yeah, it's Srini. Really good to have you with us. Srini Surbalan, Bloomberg Senior Markets Editor, walking us through some of the price action in emerging market assets and equities this year. Now, Turkey's economic growth remains resilient in the second quarter. That's despite an emergency interest rate hike by the central bank in March. The economy grew 4.8% annually, compared with the median estimate of 4.1%. Analysts say the acceleration was largely down to the higher number of working days Turkey had this year compared to 2024. Let's dig deeper into this now with Selva Demiralp, economics professor at Koç University. So upward surprise with these Turkish growth numbers. GDP figures 1.6% on the quarter, obviously annualized, coming out to much higher than expectations. But even more surprising, given that it was in this period that the central bank had to emergency hike interest rates.
Yes, so the growth number was indeed a surprise for most of us. At a quarterly basis, 1.6% is quite sizable. And it might sound kind of counterintuitive for a country that is fighting this inflation and where the policy rate, despite the recent easing cycle, is still 10 percentage points higher than the headline inflation rate, where inflation rate right now is around 33%. And the policy rate is 43%. But in the second quarter, as you mentioned, that was a time where, following Istanbul mayor's arrest, the central bank had to pause its easing cycle, hike rates further, and there was a lot of uncertainty related to political back and forth between the tension between the government and the opposition. So when we look at the subcomponents of GDP, what we observe is the investment component that increased about 9% compared to the previous quarter. So growth at that size in an environment with high interest rates and the uncertainty is kind of surprising. One wonders why investors would consider expanding their capacity. It is still a puzzle for me, but one explanation I can think of is before the general elections, in the period from September 2021 to the May 23 elections, there was a very low interest rate environment and subsequent wealth transfers. So those people who accumulated wealth perhaps benefited from the high interest rate environment in terms of earning interest on their savings and used the interest income to fund their investment. That's the explanation I can come up with.
So let me pick you up on that. Yeah, okay, so fair point on your explanation. But then, that goes back to the fact that domestic demand still appears to be quite strong. Spending by households rose by 5.1%. If domestic demand really is this strong, is it going to derail the central bank easing process that has once again restarted recently?
Well, we have to be careful about that 5%, 5.1%, because that number is compared to the second quarter of last year. So it's an annual growth rate. But what gives us a better idea about the momentum is how the consumption component or the other components change compared to the previous quarter. And then it's about 2%. It is still a significant amount of growth. However, it is not as high as 5%. What I'm trying to say is the central bank's tightening cycle seems to be helping in slowing down the household consumption. And also, when you look at the shares of these components as part of the GDP, we see that consumption's share declined from 56% to 54%, whereas investments share increased from 30% to 31%. So it is a move in the right direction, a healthier growth rate. Investment-driven growth is always a good sign. But yes, central bank has more to do and has to be more cautious with the easing cycle, given that consumption is still well aligned and inflation rate is at 33%.
Yeah. Okay. So let me just bring it back to, I think the last time we spoke was just after March, once the crackdown against opposition figures, against the mayor of Istanbul, all of that had happened. And it was a really shaky moment, I would say, in terms of investors' perceptions of what happens next. The more orthodox monetary and fiscal policy that the government was inclined to pursue. You fast forward to today. How has sentiment evolved over the course of the summer?
Markets have calmed down, and we do see an improvement in expectations. I can say this in terms of the overall consumer sentiment and also in terms of inflation expectations, because at Koç University, we are following household inflation expectations very closely. And after the March events, inflation expectations first increased to all the way to 65%. But right now they are down to 59%. So there is an improvement, but the markets and households are still cautious because there is no resolvement of the arrest of Istanbul mayor. The case is still going. And also there is the case against the main opposition party, CHP, and that's going to be in September. So there are still critical dates that people are following, and there is room for tension. But what we observe is that each time there's an escalation of tension, the central bank has to prove its capacity to interfere by another rate hike. So even in the middle of an easing cycle, in March, they had to pause and they had to hike again. And that's unfortunately costly for the economy, because if you have to switch to a higher interest rate, and that will mean higher cost of borrowing and slow down in growth, that is going to be costly for the economy.
Yeah. Really good to have you with us, Selva Demiralp, economics professor at Koç University. Thank you so much. Now for a look at some of the other stories we're following. Belgium says it will recognize the state of Palestine at the United Nations General Assembly in September. The foreign minister, Maxime Prévost, said on X that firm sanctions are being imposed against the Israeli government. Prévost says the decision came in view of what he described as humanitarian tragedy unfolding in Gaza, where Israeli offensive have displaced most of the population at least once, and the UN has declared a famine. Several Western countries said they would recognize Palestine at the UNGA following France's announcement back in July. A plane carrying European Commission President Ursula von der Leyen was disrupted by what authorities suspect was Russian signals interference in Bulgaria. The GPS jamming incident affected the plane's navigation system as it landed in Plovdiv. But the plane landed safely after authorities used alternative navigation aids. Authorities believe the incident was likely initiated by Russia, which has been suspected of increasing GPS jamming incidents across Europe since launching a full-scale invasion of Ukraine in 2022. And coming up, Dubai once again claims the top spot for executive nomads. We'll give you an exclusive peek at the latest Savills Executive Nomad Index next. This is Bloomberg. For the third year in a row, Dubai has topped the ranking as the world's best destination for executive nomads, with Abu Dhabi hot on its heels, taking second place for the second year in a row. A new report from Savills highlights how the UAE continues to attract mobile professionals with its world-class infrastructure, connectivity, and unbeatable lifestyle advantages. Joining me now is Andrew Cummings, the residential agency head at Middle East at Savills. Really good to have you with us. Let me just start off by asking you, what exactly is the Nomad Index?
So yeah, that's a very good question. Look, this is an index that we use to track executive nomads. Executive nomads are effectively digitally enabled entrepreneurs, business founders, senior managers. They're a different class to the digital nomad, which is what many people might normally think of, which might be, a general backpacker who travels around. Executive nomads are much more focused on where their families want to be, where they want to stay. And that's something we've seen a lot more in this region recently.
And what are the types of things that these professionals are looking for? What are the criteria that they look for when they're choosing these hubs?
So look, these professionals are looking to actually live in one location, but operate businesses in others. So internet connectivity is, of course, key. Air connectivity, the ease of access. Emirates and Etihad and other places. Quality of life is key, and that's not just linked to the weather, which of course the UAE has, but also world-class hospitality, schools, healthcare, and that's everything that social infrastructure that the UAE has invested so much in recently.
Yeah, so you've got Dubai in first place, Abu Dhabi in second. I took a look at the other top 10 cities around the world. Malaga, Miami, Lisbon, Barcelona. There's one other feature as well that combines all of these cities. They're sunny and they tend to be coastal. Does that make a difference as well?
It does. Look, when people are sitting in colder, less enjoyable climes, they look for something different. And what Dubai, the UAE, but also those other cities you mentioned they offer a different lifestyle option for people. And for these people who can operate their businesses globally, it's something that they're really seeking out, not just for them, but also for their families to be able to enjoy that type of lifestyle.
Yeah. Okay, let's broaden this out a little bit. I saw the Savills report from August of this year, second quarter, seeing Dubai's residential market hitting over 50,000 transactions. That's up 21% year on year. It really just feels like the momentum right now in Dubai real estate is unstoppable. Famous last words, but that really does appear to be the case. Every time we speak about Dubai real estate, it just is getting hotter and hotter.
Yeah, look, I don't want to throw around the words unstoppable by any means, but what I will say is there's nothing really holding Dubai back at the moment. When we look at where the world is and what Dubai has to offer, so much has changed over the past 5 years, particularly in the development of that social infrastructure that we discussed. This is one of the only places in the world where you can have that unbridled safety aspect, which is so appealing to ultra high net worths and people moving to the country. The world-class schooling that's here, the hospitals, that ability to go to any restaurant. So there's a huge amount of people flooding into the city. We've seen the population numbers grow, and we're seeing developers try to catch up with that demand. That's the perennial debate ultimately. It's around supply and demand. And when there's that many people moving to somewhere, it will take a while for that stock to catch up and provide a bit of a dampening.
Okay, so you think that it's going to take time for the stock to catch up, whereas other analysts are perhaps cautioning that maybe there is too much stock or anticipated supply that's going to hit the market in coming years?
Look, I think there's only been one report, which was the Fitch report, which actually said anything like that. I think if you look at every other report that's coming out, I think that what we're seeing is that while supply is still coming down the line, the demand is still significantly outstripping that. We just published also the World Cities Prime Residential Index, where Dubai ranked third. It outperformed the rest of the world with over 5% growth in the first half of this year. We're anticipating another roughly 4 to 6% growth for the remainder of this year. So we're still confident of the sort of the low to medium term trajectory for the Dubai real estate market.
Yeah, and let me just ask specifically about the prime segment of the market, because again, I note in your report that homes valued above 10 million dirhams have seen a 31% year-on-year rise in transaction volumes. That's even outpacing the rest of the market. Does this sort of tie in to this ecosystem of high-end luxury, prime residential real estate still attracting the eyeballs because of the influx of money into this part of the world?
Absolutely. There's two things that these executive nomads look for. One is prime rents and the accessibility to good quality rentals. But then when we're looking at that prime level, that sort of 10 million dirham plus, that is also hitting the bill for these people. But I think there's another thing that people really need to realize. This isn't just price growth because of the market. It's people investing in their own properties. And that's one of the things when you start to dig into the figures. When you look at areas like Jumeirah Islands, where 5 years ago there was never even a single villa sale over 10 million. And now there's recorded sales above 60 million. That's because people have spent tens of millions of dirhams renovating property and providing world-class turnkey properties. And that's what the buyers want. So this isn't just a market phenomenon. It's also about people investing back into the properties they have and bringing up those communities.
So interesting. Andrew Cummings, thank you so much for coming on our show, residential agency head of the Middle East at Savills. Well, coming up, Syria has shipped its first oil cargo in years. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Syria has exported 600,000 barrels of heavy crude in its first oil shipment in years as the lifting of Western sanctions brings relief to its war-ravaged economy. The Syrian company for oil transport says the domestic market is supplied since 2 refineries in Banias and Homs are operating at full capacity. The Syrian government has signed deals with Saudi companies to rehabilitate its energy sector. And people affected by a large-scale toxic spill at a Zambian mine in February are demanding $420 million in compensation from the Chinese state-owned company that operates the site. 2 separate groups have sent letters of demand to Sino Metals Leach Zambia, with one letter demanding $220 million in interim compensation and the other demanding $200 million to set up an emergency fund. The spill may have released toxic materials containing dangerous levels of pollutants, posing long-term risks. And that's it for our show, Horizons Middle East and Africa.